Hello and welcome to a series here at Angel Oak on everything you wanted to know about bank statement loans, but just never asked. I have the talented Bob Hutchins on this LinkedIn webinar with me, and we're going to go through really three things that are preventing a lot of you mortgage professionals out there from originating an alt income or what is known as a bank statement loan out there. And I'm just going to run through these three reasons. Number one, you're not originating bank statement loans because, heck, you're not sure how a bank statement loan income is calculated. And with all that ambiguity, geez, how could you get on the phone with a borrower when you're not sure yourself? We're going to cover that today. Number two is you heard these were hard. You heard, or you might have tried one a few years ago and it went, let's just say, wonky, and it was painful, and you don't want to try them again. Here at Angel Oak, we have streamlined this bank statement loan program and how we calculate the income. We do all the work for you. So we've taken how hard it is totally away and streamlined it. Number three is a bank statement borrower is a self-employed borrower. He or she have built their own company. They tend to be quite a controlling personality, and possibly some of you mortgage professionals out there do not want to deal with that kind of an alpha mentality and get kind of slapped around, especially if you're a little ambiguous or just don't know exactly how these loans go. So we're going to help you get confidence into addressing those borrowers, because here's what's waiting on the other side. Bank statement loans are normally very big loan amounts. Now think about it. You don't see a lot of self-employed W-2 wage earners out there buying $1 million, $2, $3, $4, $5 million house. Folks, I'm here to tell you, 100% those folks that are buying those luxury real properties are self-employed. Now, there's over 45 million self-employed Americans out there, and this is such an underrated program out there. Not a lot of people are doing it. Think about it. Chase, Wells Fargo, B of A, all the money center banks, they can't do these loans. So you have an enormous income opportunity in doing these loans. So let's just get into how do we go about calculating the income on a bank statement loan. You have the option of going either business bank statements or personal bank statements. Bob, what do we see most when it comes to a bank statement loan? Because, by the way, Bob and I together have actually been a part of funding possibly over $1 billion in bank statement loans to date. We've been at this for 8 years with Angel Oak. So, boy, when you say we've seen everything, boy, you cannot begin to anticipate all that is of the human element out there. And then you overlay entrepreneurs. And right when we think we've seen it all, there's always a new scenario. So we're not good at these. We're great at them. Bob, tell us, personal or business, what do we see most?
Well, I think it's a good idea to always start with the business account. If they have a business account, it's possible they could be running their business through a personal account, and then you're only going to have the personal option. But if they have a business account, we know that the majority of those deposits are going to be from self-employed business operations. When using a personal account, they could have income sources from coming in from different places, and it gets a little more difficult. The easiest situation is if they have a business account and they pay themselves to their personal account. We'll use 100% of those deposits to the personal account, and we would not need to apply any sort of expense factor in that situation. But it all comes down to, where does the money go?
That's it, Bob. Thank you. And with Angel Oak, you guys, we don't care what the balance is. We don't care about withdrawals. All we're actually calculating is deposits. To us, that's their business revenue. So when you're originating a bank statement loan and you find out your borrower is self-employed, first question is, do you own the company 100% yourself? You see, if they are 100% owner of the company, guess what they're doing? They're writing a lot of their personal expenses through their company. Folks, think about it. They're writing all their car expenses. They're writing all their traveling expenses. They go out to dinner. They no doubt will be writing that off if they get a newspaper subscription that's being paid by their company. So this is the American tax code. You have W-2 and you have self-employed. Self-employed people create jobs. Self-employed people right here are that are the risk takers. The job creators get all the tax prefs. W-2 wage earners do not take risks. They do not create jobs, so they don't get the tax prefs. So self-employed borrower owning the company 100% themselves, you're going in it. They have a business checking account. You're going to want to go business bank statement traditionally. Now, our number one demographic on bank statement loans are the American real estate professional. That's right. Realtors are our number one demographic on bank statement loans, but they're self-employed, but they don't have a business account. They only have a personal checking account. So what are we doing there? You would collect either 12 or 24 months of their personal bank statements, and we're going to add up all the deposits that are from the normal course of them selling homes. If it's 12 months, add them all up, divide by 12, and there's the average monthly deposit income. Bob, take it from there.
Yes, next time you have a self-employed borrower and you've calculated their income on their tax returns, it's very simple to just ask them, hey, send me your most recent 12 months bank statements. Now, all of a sudden, instead of them qualifying for maybe a $600,000 loan, maybe now they qualify for that $1.2 million loan that they actually want, because we've calculated their purchasing power up front using the bank statements. Very simple procedure. You know their purchasing power.
You guys, we haven't really tracked it, but I would guess, Bob, versus what they're, if you go full doc, self-employed borrower, tax returns, let's say they can buy out here in Newport Beach, California, a $500,000 condo, which is hard to find. But when you go bank statements, non-traditional, these non-agency, now they qualify for up to a $2 million loan amount. So they have so much more purchasing power by going bank statements than full doc. But let's get back to how we calculate the income. So let's just take that realtor, for example. We collected 12 months worth of their bank statements, added up all the deposits, divided by 12. Let's say the income is $10,000 a month. With that, what we do across the board is hit them with a 50% expense ratio. Now, for a realtor, they don't have hardly any overhead. So hitting them with a 50% expense ratio would kill the loan. So in that situation, we will allow up to 85% of what that realtor deposits into their personal checking account to qualify for this bank statement loan. So the average deposits are $10,000. Let's keep it simple. We would allow $8,500 towards their income. That's the income that we're going to have you put on the 1003, and we move the loan off into funding. Now, on a business bank statement loan that they're not a realtor, that they have maybe one or two, maybe 7 different companies, when you're originating that borrower, is you want to find out what one of their companies is their bread and butter. You guys, self-employed borrowers always have their favorite company if they have more than one. And the one that has the most revenue is the bank statements that we're going to want to use. Now, if that bank statement, if the calculation is still light, we want to see 40% debt to income ratio front end, 50 back end, we will pivot to the next company. As long as these companies have totally separate checking accounts and there's not a lot of transfers back and forth, which is the shell game, and it makes it very hard to underwrite these loans to be ATR compliant, meaning we have to document the ability for the borrower to repay these loans. And if we're including deposits that are just transfers, well, we might have a violation on ATR because we're counting a transfer as the borrower's income. So again, business bank statement loan, they have more than one company. The first company's revenue is still light on deposits in order to make the loan work. We will use the second company as long as they have separate checking accounts. Bob, anything you want to add to that?
Yes, I just want to remind how simple it is. We're going to calculate that income for you. All you need to do is you're going to get the application and credit, which you probably already have, and you're going to upload the 12 or 24 months bank statements to us up front. And I put this all together. I coordinate it. I'm Bank Statement Bob. And then I work with our internal BSRT, which is my bank statement review team, which is a team of underwriters that will calculate the income for us. They'll send me the deposit spreadsheet, which I then share with you, and we see where we are from that point. Very simple process. We do it all for you.
That one takeaway right there, folks, we do this for you. All you do is give us a fully baked 1003, including if the borrower is currently renting. We need to know what their rental, what they're paying for rent each month, because we can't have a rent-free borrower turn around and do a bank statement loan. We need to know their housing history. It's one of the 8 pillars of ATR. So payment shock. So just make sure if they're renting, put that rent, what their rent figure is per month on your 1003. Run credit. So we need a 1003 credit, and give us the bank statements. And folks, we do all this for you. And here's the kicker. We're going to fully credit and income underwrite these bank statement loans for you up front within 24, normally 48 hours. Now think about that. We do this even on a TBD property. Think about your realtor referral partners out there. When they have a self-employed borrower, they're like, oh my God, they've all driven a self-employed borrower around to 7 to maybe 13 different showings. Now it's time to write a contract. Oh, and by the way, that approval letter from B of A just blew up because, oh, we didn't know that they had this other company that took all these losses, or, oh, we didn't know about all this depreciation, or, oh, we didn't know loss carry forward. For whatever reason, they will not fully income underwrite a bank statement loan on a TBD property. We will. So with that said, we do all the work for you on these bank statement loans. You can even go offline, contact me and Bob, and we'll do a personalized training for you to get you comfortable on how we calculate income on a bank statement loan. But folks, it's easy. Now, I want to pivot now to anybody out there that has done a bank statement loan and it went kind of wonky. Here's why. When we started doing bank statement loans, Bob, do you remember a borrower with a 50% loan to value, self-employed, 800 FICO score? You remember what the rates were, Bob?
6s and 7s a few years ago.
8 years ago, it was 9.99.
Well,
bank statement loans were all 9.99. And we went to market with that. And sure enough, we were funding a lot of bank statement loans. Now, our bank statement loans, folks, are starting at 3.25%, and that's a 30-year fixed rate. 3.25% on a bank statement loan, 30-year fixed. It just doesn't get any better. So any of you folks out there that have ever done a bank statement loan, folks, give us a call. Now it's time to put your borrower in a much more favorable rate. Plus, a lot of our friendly competitors are all on 5 or 7-1 arms. All of Angel Oak loans are a 30-year fixed. Really an easy sell, and there's no hit to rate for going 30-year fixed. Okay, so next I want to address the kind of borrower that is a bank statement loan borrower, and they can be he or she can be quite an intimidating character, especially if they have, how do I say this? If they've got millions and millions of dollars. See, never before in the history of America can you have an ability to repay ATR compliant loan where a borrower can document to the IRS that he makes $34,000 a year in income and turn around and buy a $2 million house. Never before. So this borrower is delighted to the fact that they can even get a loan, because a lot of these folks out there think that they have to write a check in order to buy a house because they just don't show a lot of income on their taxes. So with that said, the personality of a bank statement borrower can go a couple of ways, but you have to have confidence when you're talking to any one of your borrowers, because obviously this is a huge financial decision for them. So bank statement borrowers, even though they're controlling, you just originate it as a matter of a fact. You would just methodically go through, Mr. Borrower, you're self-employed. Do you own your company 100% yourself? Oh, you don't. I see. You have 3 partners, so you own 1/4 of your business. So with that type of borrower, folks, you're going to want to go, personal bank statement loan. Why? Because her 3 other partners would get awful grumpy with them if they were writing all their personal bills through their collective company. So in a partnership, they always pay themselves. That's a real easy loan to do, a personal bank statement loan, and we will allow 100% of those deposits that flow into their personal checking account. But if they own their company 100% themselves, then you're traditionally, again, wanting to go business bank statements, letting them know here's how it works. Then you're going to find out, obviously, the type of business that they're in. The type of business that they're in, if they have 7 locations and maybe 130 employees, well, that's a lot of overhead. So what we're going to do is we're going to allow 30% of what that borrower deposits in their business account. Now, 30% margins are great. Restaurants are running at around 20, sometimes 10. Retail runs at 15% margin, and we're giving borrowers 30% margins if they have a lot of overhead. If they have modest overhead, maybe 1 or 2 locations and maybe 5 employees, then we're going to give them 50% margins. We're going to literally allow 50% of what they deposit into their business checking account. I find that quite generous. Now, if they're a sole proprietor, if they're somebody that has very low overhead, like a real estate agent, like a programmer out there, like people in the gig economy, then we'll allow up to 85% of what they deposit into their business account. Now, folks, with the bank statement borrower, we will allow, if they have both W-2 income and self-employment income, we'll allow both. Just as long as that self-employment income isn't, as Bob says, a basket weaving side hustle that they're making $200 a month. We want to see at least 30% of what they make W-2 coming in from their gig or their self-employment efforts. Bob, anything you want to add to that?
Yeah, often you'll have let's say you have a W-2 teacher spouse, for example. You can absolutely use that spouse's W-2 income. Social Security income you can use by providing the awards letter. We don't want to see any tax returns. And also, we've been talking about the purchase opportunities here mostly, but don't forget the refinance opportunities here from those borrowers several years ago that have the higher interest rate. Maybe they did a bank statement loan. Or maybe they just cut a check and they want some cash out maybe to put into their business. There's huge refinance opportunities in this segment of the market also.
Indeed. So we're going to wrap up right now, folks. But here's the thing. 45 million self-employed Americans out there. It's a lot bigger than the VA market. On top of that, folks, let's talk about the economy went like this over the last 4 years. And then we hit the pandemic. So a lot of self-employed people like dry cleaners, restaurant owners, boy, they got crushed. But other industries, other self-employed people went kaboom. How about contractors? If you guys know anybody that's a licensed contractor out there, they're kind of printing money. There is a lot of different microeconomies out there that are crushing it, that would love to be able to buy either a house or a bigger house, but guess what? They're writing off too much. So there's so much opportunity out there with these borrowers. And again, here at Angel Oak, we are going to literally take you by the hand and walk you through every stage of doing your first couple of bank statement loans. And then we're going to get you rich on the niche. Because folks, once again, less than 15% of all licensed loan officers in America have ever done a non-QM loan, which includes bank statements. Think about that. 85% of your competition has yet to do these. So, folks, I'm telling you, this is such a great opportunity. We have a perfect storm with these bank statement loans, and Angel Oak would love to partner with you folks in getting these things done. Bob, anything you want to end with?
Yeah, I'm going to finish up by sharing my screen quickly here to just show you how easy it is to price these out and get it submitted for pre-qualification. So I'm on our website here. Can you see that?
It's flickering, but yes. I don't know why it's flickering. Go ahead and go back to it, Bob, maybe as you start driving.
There we go. Okay, here's our website. Very simple. You're going to click, it's angeloakms.com.
Bookmark it.
You're going to click on the non-QM quick quote here. This is your pricing tool. You can see there's no login required. We're going to do just a very simple bank statement type scenario. Most of these self-employed borrowers have great credit because they run a business. They keep their credit clean. Maybe we're just doing a simple 24-month business bank statement purchase loan. You can see the rate pops up immediately, 3.75, 80% LTV, for example.
3.75 and 80% LTV. Is there any MI on these programs, Bob?
I can't even spell MI. You can see we can go to 90% LTV.
There's no MI is what that means.
No MI. You find the program you want. You can play around with this a little bit. You select the program you want. You can skip the 3.4 if you want. Brings you to the screen where you just upload your app and credit, and you just can drag and drop the bank statements in here, and you submit that, and that comes to us for evaluation, and we calculate the income. And that took just no more than a few seconds.
We do the bank statement calculation for you. You guys, last thing we want you to do is hover over a year or 2 years worth of a self-employment person's bank statements trying to figure out the income. Nope, just give it all to us and we do that. We'd rather have you guys get back out there and actually find more borrowers. That's where you make money, not calculating income. We do it for you. So with that said, Bank Statement Bob, Angel Oak Eric, you guys, we are here to help you get rich on this bank statement niche. Trust me, jump in. The water is fine in bank statement land.
Okay.